global perspective, the trifecta, as we call it, the 10-year bond yields in the US, the dollar index, and most importantly, Brent crude prices, they have moved against us. Brent crude for one is up 4% this week. It's back above $85 a barrel. I mean, is this going to be a problem for us in the upcoming months? Because not many have been talking about this. We have been focusing on mostly the domestic factors, but there are some troubles spelling in the global arena as well.
No, I think you're right, Suyash. I think global crude prices, if they move up by further 4-5%, I think that could definitely mean a more problematic situation for the oil marketing companies. I think everybody was expecting that ahead of the election, petrol and diesel prices could be cut. I think that cut has now come in. I think companies like HPCL, according to us, would be the significant, possibly the most significantly impacted. I think companies like BPCL, IOC are not that badly impacted. And the good part is that even as of now, the throughput from aviation, automotive sectors continues to be pretty healthy. So I think any further spike in crude oil prices is definitely something the markets have not factored in. And that could obviously put a dent in all these oil marketing companies, which actually are momentum-based stocks. Whenever crude prices come down, there is a big jerk in the stock price. Overall, the markets are also now looking at how the Fed policy pans out. I think clearly inflation has toned down, but what could be the commentary from Fed? I think that is something which would be very importantly noted, because clearly I think the markets are now waiting when the first rate cut could happen. So I think, globally inflation, and secondly, obviously other macroeconomic concerns, specifically on the job rate growth, on the inflationary kind of concern. These would be data points which I think even markets, Indian markets would be closely monitoring. And obviously that would be related to, the local RBI, how RBI would be reacting to this, and probably when we could have our first rate cut. But I think the first agenda on everybody's mind is obviously the election schedule, which would be rolled out very soon. And I think after that, you could see a lot of volatility till the final election date comes and we go to elections. But till then, I think markets are obviously going to be in a zigzag fashion. You won't be finding a linear upside in the markets at this point of time.
Good morning, Mr. Gorakshakar. Now, you spoke about reduction in crude oil prices. Now, the Indian government announced a rupees 2 per litre cut in petrol and diesel prices yesterday. This comes on the back of the brokerage firm CLSA, which had recently downgraded and reiterated its sell recommendation for the big three oil companies in India. When I look at the stocks of these three companies, I mean IOC, BPCL and HPCL, last 5 days they have been in the negative. Last 1 month they have been in the negative. But they have given stupendous results, especially IOC and HPCL in the last 1 year. What do you make of these big three? Which way are they going? They have been downgraded on one side. The reduction in prices probably will help them, especially IOC, as you mentioned.
No, I think, see, most of the price cut, which you rightly mentioned, in the last 1 month, these stocks have been battered down. So I think this price cut for petrol and diesel, which has happened, I think most of the negatives are in the price. But yes, if crude prices further increase, that could possibly be a little more negative for these companies. And I think HPCL seems to be the most vulnerable. According to us, HPCL, has a high component of diesel. As far as BPCL and IOC is concerned, I think the damage is not that much, at least as of now. But as I mentioned clearly that, if crude prices go up, and obviously the current momentum actually shows that there is some uptick happening in the crude oil price, that is definitely not a good sign, because obviously oil marketing companies, the entire profitability is dependent on the crude which they import. So I think clearly, despite a very strong throughput seen in automotive and aviation kind of segments, we could see a little bit patchy kind of moment. And yes, I think these companies have made a huge amount of money in the past 2 to 3 quarters because of softer crude prices. So I think going forward, the trajectory will depend on how the crude oil prices internationally are maintained. If there is a rise of 3-4% further, that could obviously create a significant dent in the profitability of all these companies. So we have been advising our clients to stay put, no fresh buying suggested. But I think whoever is holding on to stocks like IOC, BPCL can definitely hold on. I think today also the prices have not corrected that significantly because as you mentioned, the price erosion has already happened in the last 3-4 weeks.